This podcast is brought to you by Reynolds and Reynolds, the industry leader in automotive technology. Learn how inadequate data may be impacting your used vehicle department at rayray.com/used cars. That's REYREY.com/used-cars.
Want to dive deeper into the topics you hear about on Daily Drive? We're offering listeners a special offer, 20% off a 1-year Automotive News digital subscription. That gets you access to all of our news, information, and analysis made for automotive industry leaders like you. Go to autonews.com/Daily Drive promo to redeem. Welcome to Daily Drive for Wednesday, December 20th, 2023. I'm Jamie Butters, Executive Editor of Automotive News here in Detroit.
And I'm Kellen Walker in Las Vegas. Today on the show, half of Buick's dealerships take buyouts rather than sell EVs. 4 more brands adopt Tesla's charging standard. And Kia is allegedly withholding Canadian deliveries after meeting its 2023 sales target. Plus, a look at General Motors' year in 2023 through challenging EV rollouts and historic labor strikes.
They reinstated the guidance that they had suspended during the strike, but, still are expecting to be pretty profitable this year.
Let's run through all the news you need to know to keep up in the auto industry.
Nearly half of Buick's U.S. dealerships left the brand this year. That's after the GM unit offered buyouts for those who didn't want to invest in selling electric vehicles. Buick now says it will end the year with about 1,000 dealerships nationwide. That's 47% fewer than at the start of 2023. Buick offered to buy out retailers who did not want to invest hundreds of thousands of dollars on tooling, equipment, and training to prepare to sell and service EVs as the brand goes all electric by the end of the decade. According to Duncan Aldred, GM's vice president over Buick and GMC, the dealerships that left Buick this year previously represented about 20% of Buick's U.S. sales. He tells us at Automotive News that dealer throughput has increased by an average of 300% this year. Buick says about 89% of the nation's population is still within 25 miles of a Buick dealership.
Volkswagen, Audi, Porsche, and Scout are the latest automakers to adopt Tesla's North American charging standard. Volkswagen Group of America says that starting in 2025, Volkswagen, Audi, and Porsche electric vehicles will be equipped with the port, allowing access to Tesla's supercharger network. The 3 German brands have waves of EVs set to arrive in 2024 and 2025. Scout Motors, a brand that Volkswagen Group is reviving to make rugged EVs, also plan to use the standard. Production of Scout's upcoming SUV and pickup is slated to begin around late 2026, with sales to begin soon after. The 4 brands join a growing list of automakers such as Ford, General Motors, Nissan, Hyundai, and Toyota that have announced such plans in 2023. In other Volkswagen Group news today, the automaker and its powerful labor leaders have agreed to cost-cutting measures projected to save 10 billion euros or about $11 billion, with the aim of boosting low returns at the company's namesake brand. The measures include speeding up development and production times, reducing staff costs, and implementing a more efficient procurement strategy.
For the 3rd year in a row, Ford had the most recalls of any U.S. automaker. That's according to partial data from NHTSA. Through December 18th, Ford issued 54 recalls, affecting nearly 5.7 million vehicles in the U.S. this year. The automaker has been chipping away at nagging quality problems, and it announced 21% fewer recalls than it did in 2022, when the automaker reported safety fixes for more than 8.7 million vehicles. While Ford had the most recalls, Tesla had the biggest one. An over-the-air software recall this month related to the auto-steer function of its autopilot suite. It covered more than 2 million vehicles, nearly every model sold from October 2012 to December 2023. That's this month.
And Kia Canada is deliberately delaying deliveries of vehicles to customers to distort sales numbers. That's according to a CBC News report. The new cars are being withheld from Kia's Ontario dealerships and reportedly from many more across the country, as part of a plan to game the number of sales in the last 6 weeks of the year. CBC's investigative arm obtained a video in which Kia's Central Region Manager, Vince Capicato, explained the scheme to more than 100 dealership representatives in Ontario during a November 17th video call.
Kia Canada wants to control wholesale and retail performance in 2023 to not show high overachievement.
Instead of shipping all the vehicles to dealerships, Capicato told the dealers only some will be released. He said the rest will remain on compounds until the new year. It's not clear whether all undelivered vehicles are sold. Capicato suggested that dealers tell customers the setbacks were because of delivery and logistic delays. He said the reason is to avoid appearing too successful in the eyes of headquarters in Korea. And those are today's headlines. Jamie, Kia is delaying deliveries of vehicles to customers to distort sales numbers. Why does this seem somewhat illegal?
It probably feels that way because it's so patently dishonest. The plans to not deliver them and blame it on logistics or other problems as if they were outside problems, not self-inflicted. It may or may not be illegal. It's not clear how many of the vehicles have already been sold to consumers, but it certainly is doing damage to the relationship between the manufacturer in Korea and the dealers across Canada.
Interesting stuff. Coming up, we'll continue our year-end conversations with a look at GM's performance in 2023. That's next on Daily Drive.
The auto industry's shift to carbon neutrality is here and it's accelerating. But is it enough?
This is a moral imperative, an economic imperative, a moment of peril, but also a moment of extraordinary possibilities.
No more hesitancy, no more excuses, no more waiting for the others to move first. There is simply no more time for that.
Driving to Zero is a new podcast series from Automotive News that looks at the auto industry's roadmap to carbon neutrality. We take a big picture look at the environmental, political, and social trends pushing the move toward a greener future. And we pull back the curtain on how these decisions are being made at the highest levels.
I said, the headline that you need is GM believes in an all-electric future. And I think Dan Ammon and Mary Barra pretty much said the same thing, which is like, but we don't.
Spoiler alert, they came around to that idea. Find out how and much more. I'm Jake Neer. Join me and Automotive News Executive Editor Jamie Butters on Driving to Zero, available now wherever you get your podcasts.
Lack of inventory, increased auction fees, and a volatile market means stocking your lot can be challenging these days. To be successful, you have to move fast. You need to make decisions quickly at auction. You need to inspect trade-ins and decide on an offer that will benefit you without slowing down the sales process. You need to appraise and price vehicles with the most up-to-date information possible in a market that can change quickly. But the data you rely on to make these decisions could be holding you back. How often do you find yourself manually filtering through comps because there are outliers that don't match the vehicle you're appraising? When unexpected mechanical issues come up, how much time do you have to spend looking back through comps to reprice the vehicle and determine if the reconditioning costs are worth it? How long do you spend searching through individual auction and third-party websites for the inventory you need? These problems affect the entire used vehicle process, from acquisition to appraisal to merchandising. Visit rayray.com/usedcars to explore how old and irrelevant vehicle information may be holding you back and discover how to make improvements for faster, more accurate, and more profitable decisions. That's rey.com/used-cars.
Welcome back to Daily Drive. I'm Jamie Butters with Kellen Walker. General Motors has faced some enormous challenges in 2023. The automaker's in the midst of one of the most audacious electric vehicle rollouts in the industry, which hasn't gone as smoothly as CEO Mary Barra would like. Meanwhile, like all Detroit 3 automakers, GM faced work stoppages related to its contract talks with the UAW and with Unifor. Lindsay VanHulle covers GM for us at Automotive News. She joins me to talk about the company's year in 2023 and what's next for the automaker in the new year. Lindsay VanHulle, welcome back to Daily Drive.
Thanks for having me.
So this is part of our year-end series of discussions looking back on Really the big news of 2023, of course, on the GM beat, it really starts with the UAW, doesn't it?
It really does.
This was a historic contract situation, Sean Fain's election, the strike. How did it all play out within GM? It seemed like, of course, the tensions were really high. Some of the rhetoric was hotter than in the past years.
Well, I think the thing that can't be overlooked is just how different the tactic was this year. The UAW had said from the beginning, we're going to try this stand-up strike. It's going to be a different approach than we've ever done, calling on individual plants, really to keep the automakers guessing. And I think it's fair to say that succeeded in that goal. It was difficult to predict which plants were going to go and when. And so we saw a few assembly plants go first, followed by some parts distribution centers the week after that, and additional plants, at a different cadence throughout the 6 weeks or so.
It was interesting because there was sort of this keeping the automakers on their toes, spurring anxiety among executives about what was going to happen next. And yet one of the effects was to not be as damaging of a strike as a traditional strike that goes against the entire company writ large. Of course, in 2019, GM was struck for about the same length of time, but it was the whole company. And that was a lot more costly for General Motors than this strike was.
Yeah, and I think that's the idea being not wanting to take everything out all at once, but to keep that escalating. For the union, it was, I always have another card to play. And so I can, depending on how things go, it's one more card I can play and more leverage that I can use to try to help on the negotiations end. For the automaker, it meant many plants kept running, all of their shifts. They kept turning out vehicles, and they were still able to have certain models that were still in supply. There were some that were a little bit more constrained than others, but they were still able to keep most of their plants running.
Well, and as we get to the end of the year and in January, when we're tallying up the full year results, it's going to mean better profit sharing for the UAW members than if they had a devastating, $3 billion sort of hit kind of strike on GM.
Yeah, that's true.
Yeah. Something probably was on their minds, but really a fine line to walk between wanting to flex and show their power and maybe wanting to not do as much economic damage as they could.
Yeah.
Very curious.
Yeah. I mean, GM did say, at the end of it was about $1 billion impact, but they did come back, a few weeks later and basically announced a $10 billion share buyback program. They reinstated the guidance that they had suspended during the strike, but, still are expecting to be pretty profitable this year.
Mm-hmm. So what is the upshot? What is the takeaway from this contract, right? It's going to saddle them with higher costs. Is it something that GM can overcome?
They're committing to basically to the market, to the public that they can. They're expressing, I think the buyback being a sign that they've got confidence in their ability to do that. They're looking at the ability to be able to offset that. They've talked about the ability to fully offset that in 2024. I think overall between the UAW and the Unifor in Canada, it's about, I think, $9.3 billion in additional costs over the lifetime. So about $575 per vehicle. For them, they're going to have to look at things like efficiency, trying to just run leaner, trying to find more, reduce combinations and just try to operate as more efficiently as possible.
Yeah, I would think investors would be encouraged, Mary Barra's confidence in their ability to absorb the cost, to find other efficiencies. But that $10 billion buyback, I feel like that's going to come back to haunt them in 2028. Maybe Mary Barra will retire by then, but if she's still in place, I guess it was more Ford than GM in a sense that was saying, we can't go any further. But all the companies felt like they were really pushed. But then to come back and say, well, we can afford $10 billion for the shareholders, I don't think that's going to sit very well with the UAW going forward.
Yeah, I mean, that's going to be a key thing to watch in the next round, as well as the additional membership that the UAW is able to gain at plants that are currently non-union. That's sort of where the union is now turning its attention to try and bring, non-unionized plants in the U.S. So the idea being that if we have a larger membership base, we can then, have more leverage at the table. So it's going to be a lot to watch for in the next cycle.
Any other last thoughts on the UAW before we turn to some other matters?
I think that one of the big things in the contract that I'll be interested to see is just sort of how some of the the different provisions played out, and namely, bringing the battery plants and the joint venture battery plants under the master agreement. There's a lot, I think, that's still to be determined how that's going to look. GM has one joint venture battery plant in Ohio that's up and running right now. It has, 3 others it's announced, 2 that are in various stages of construction and doing, hiring and those kinds of things. So as those plants come online, how that all looks at the end of the day is going to be, I think, interesting to follow and cover.
Absolutely. So on some product front, of course, you mentioned the battery plant that's up and running. I mean, it seems like it's not fully in stride the way it wants to be. Neither has Spring Hill, where they make the Cadillac Lyriq. GM has had some puts and takes on the EV product front, where we kind of had some of the things that we thought would be here this year not make it yet.
Yeah, I think some of it is, just broader industry and market scenarios that we've talked about, before. Just a lot of that demand, I think, advancing slower than the automakers had expected. Mm-hmm. You saw some of that when GM announced that they were going to delay the opening and the retooling of a second plant to build full-size electric pickups. Mm-hmm. They've got enough capacity in one right now to be able to do that. But they've also had just, their own production hiccups. One of the biggest things has been just production of kind of an automated module assembly process. They've had to kind of take that and really do that manually, which has been slower and it's kind of held back some of that. And I think that's been frustrating to the leadership. And they've talked about, Mary Barra has talked about, frankly, we didn't execute well on EVs this year. And so they are looking at trying to get that behind them, both in the actual constraint, but then also adding more capacity at other plants to try and avoid this in the future. But they've also, basically stopped providing sort of the incremental production targets that they had been talking about, and are still looking at, having the ability to build 1 million EVs in 2025 in North America, but they're not going to give those sort of volume steps along the way.
It sounds like they're not convinced there's going to be enough demand to make 1 million EVs in the U.S. or in North America.
Yeah, I mean, one of the things they've said is we want to build to what demand is. I think it was Paul Jacobson, the CFO, who had said, I don't want to, build a bunch of EVs and kind of stuff them into the market and then have to discount just to move them. So I think they're being cognizant of what the demand is and trying to build there and not overbuild to the point then that, incentives have to go up.
I'm sympathetic with how hard it must be to project what demand is going to be at demanded given price points. And then you have, the leading player in the market, in the EV segment, Tesla, slashing their prices all through the year, really putting a lot of pressure on these incumbents that are trying to come to market. Maybe, trying to follow Tesla's example of starting at the high end and working their way down. And like the earth is just falling out from under them.
Yeah, one of the things that they've been pretty consistent about is their pricing. And I think what they'll tell you is they, feel pretty confident, pretty consistent that pricing has held. They have talked about wanting to kind of start with, these brand new EVs, these brand new models, high technology, high content, to kind of show what these vehicles could do and could be, and then begin to build out the lineup with some of the lower contented trims going forward.
Well, and that's been one of the real challenges in the market. Less growth this year than we've seen in some of the previous years, especially throughout the course of the year relative to the market. And part of that's been a lack of new vehicles, especially new, more affordable vehicles. And we were hoping to see an affordable electric Equinox this year. That has been pushed back. Is that still coming in 2024? Is that maybe going to be one of the few positive levers to drive EV sales?
It is. It is going to be in 2024. It is delayed a bit. It's going to start at a little bit of a higher price point. The initial model that's coming is going to have a little bit more content and features. It'll start around $50,000. But GM has said that there is going to be a lower priced kind of base Equinox EV that will also come in 2024. It won't start around $30,000, which is the price that they had kind of given initially. It's going to be closer to $35,000. But Chevy has said, they're pretty happy with kind of where they are in the ballpark of what they had said initially.
I mean, that would be a much more compelling value proposition than a lot of what's on the market.
And not to be forgotten is, the Bolt is going to be coming back as well. That is the the affordable EV in the portfolio right now, and it's going away at the end of this year. There will be kind of a bolt-sized hole for a year or so, but Mary Barra had talked just this month that the Bolt is going to come back in 2025, and they'd already talked about wanting to bring it back onto the new Ultium platform. It's right now it's built on their older battery architecture, and they can do it at a faster timeline, lower cost kind of battery pack. So I think when that comes back, that's going to be, I think, a big game changer as well.
Affordable Chevys are, of course, super important for General Motors, but so is the Cadillac. And we've got the other end of the spectrum, right? The Escalade IQ, of course, being Cadillac's designation for their EVs. Tell me about this truck, and when are we going to see this SUV in real life?
Well, I first saw it in August when it was revealed, and it's it's certainly going to be, I think, probably the most expensive Cadillac that is built. It's
other than the Celestiq.
This is true.
Yeah.
Yes, the most expensive Escalade ever built, I should say. It'll start around $130,000 with shipping. It'll be built in the first half of 24, and then it'll begin to arrive next year. But it takes, the way that they've sort of described it is, we have this flagship that has been in the market for a quarter of a century, and our nameplate going forward is all going to be electric. And so you take this equity that's been really built up in pop culture, in just the culture in general, and trying to make that electric and going forward. So there's a lot of technology, a lot of features. It's going to be, I think, interesting to see where it goes. And even Cadillac says, right now it's kind of hard to know where the market's going to fall, those who are going to want the ICE version, those who are going to want the EV version. But, as that gets closer, I think it'll be interesting to see where, just how the customer breakdown happens.
And then one other piece of product news I want to ask you about. We keep seeing this happen in the market, right? More EVs, more crossovers and SUVs, and fewer cars. And GM saying goodbye to another car line with the Chevy Camaro. That's just not a segment that really seems to have enough legs going forward.
It's interesting because they were, I think, careful in how they described it. The current generation, the 6th generation Camaro, is going away at the end of this model year. But in announcing that, they said, this isn't the end of Camaro's story. There's some room, I think, left open, a little bit of room for what that might look like. I think, could we speculate that it might come back electric? It's possible. Seems
like that's what they're hinting at.
Yeah.
Yeah. So what are you looking forward to? What are you anticipating as the big story or two out of 2024 for General Motors?
Well, labor talks are done, so that's not going to be something that we'll be following. But I think, like I mentioned with the battery plants, more of those coming online, beginning to see how the provisions in that contract begin to play out. That's going to be something that'll be interesting to follow. I think the EV transition is going to be something that will be a story for General Motors for a long time. They've really committed to this transition. They have a couple brands that are planning to be all EV by the end of the decade. And so as more of those nameplates are announced, just can GM get past some of the constraints it's had? Can it begin to ramp up and scale, I think, the way that it has wanted to? And really have more of these out there. I think, what they want is to have more of these on dealers' lots. And so more people can then drive them, and they'll be on the roads, and, people will begin to see them and want to try them out. And so I think that's going to be a really big, important story to follow. It is not just next year, but into the future.
The one I'll be watching, GM has regained its rightful place, if you will, as number one in the U.S. market. Toyota's really been hamstrung in recent years with chip supply and production. It'll be interesting. Toyota seems to be getting pretty much back to full speed. I wonder if they can make enough and send enough vehicles to the U.S. to challenge General Motors for number one next year. I presume GM is not planning to let that happen.
I can't imagine that they are.
All right. Lindsay VanHulle, thanks so much for joining me today for this year-in review talk about General Motors.
Thanks so much for having me.
That's Daily Drive for today. I'm Jamie Butters.
And I'm Kellen Walker. Thanks to Automotive News coordinating producer Jake Neer, as well as our own Jack Walsworth and Audrey LaForest for their reporting for today's podcast. We also had reporting from Grace Macaluso from our sibling publication, Automotive News Canada. You can get the latest news on manufacturing, retail, and everything happening in the auto industry at autonews.com.
Come back tomorrow for a look at the year Stellantis had in 2023 and CEO Carlos Tavares' goal to roll out affordable EVs for the masses.
I know that Carlos has been really big on the middle class and making sure you stay affordable for them. But that 25K target he was talking about is, I think it's a long ways off.
If you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.